the most valuable cryptocurrency in the world. Given the breakout year that most crypto assets have had, it would be reasonable to assume that further maturation of the crypto product marketplace is set to continue. No matter which aspect of the crypto sector is examined, 2024 has been a bounce-back year for prices, with the accompanying confidence returning to both the institutional and retail investing public. One of the primary beneficiaries of this increased sentiment has been the opinion around the likelihood of an Ether ETF. After all, following years of rejected applications by a variety of institutions, there are now 11 Bitcoin ETFs trading in the United States. While fund flows may have slowed somewhat, this slowdown follows a red-hot start that has seen Bitcoin rapidly become among the largest underlying assets for ETFs in the world. As Ether remains the second largest cryptocurrency in the world, and the token associated with what is arguably the most important blockchain in the crypto market, the time for an ETF has seemingly arrived. Price volatility aside, the legitimacy that a Bitcoin ETF has created in the TradFi space is significant. After years of ignoring this asset class, the billions of dollars allocated and invested in 2024 cannot be ignored. An even clearer example of the benefits that the Bitcoin ETF has resulted in is the First Nation, in essence creating a Bitcoin version of Fort Knox. El Salvador, a multi-year buyer of Bitcoin, has transferred the majority of Bitcoin holdings into a cold storage wallet to be held in a secure location within sovereign borders. Ethereum, the name for the cryptocurrency platform, is the second name you're most likely to recognize in the crypto space. The system allows you to use Ether, the currency, to perform a number of functions, but the smart contract aspect of Ethereum helps make it a popular currency. Given all of these positive trends, the likelihood of an Ether ETF getting approved might seem a sure thing. In the most recent example of the anti-crypto perspective that has seemingly dominated the conversations at the Commission under Chairperson Gary Gensler, there is evidence that several U.S. companies are under investigation with regards to dealings with the Ethereum Foundation. These recent investigations follow statements made by the SEC that proof-of-stake blockchains and associated tokens could be classified as investment contracts, as well as lawsuits filed against exchanges such as Coinbase and Kraken focusing on the staking-as-a-service services offered to investors. By focusing on the Ethereum Foundation, the SEC does have several pieces of information that could be used to construct a case to classify Ether as a security. The Foundation has issued tokens to fund further development. Some tokens have been allocated to founders. The work conducted by the Foundation is connected to increasing the value of said tokens. And unlike Bitcoin, there is a founding managing team involved in the promotion and further development of the Ethereum blockchain. Regardless of the opposition the SEC continues to face, and the multiple problems that moving unilaterally would create, the Commission seems set to continue these efforts. Bitcoin gets all the headlines when people talk about cryptocurrencies, but there are literally thousands of other options when it comes to these digital currencies. In fact, cryptos that aren't Bitcoin are usually considered and also ran what are called altcoins or alternatives to Bitcoin. While Bitcoin may have been the first major cryptocurrency to hit the market, it debuted in 2009, many others have become highly popular, even if not quite as large as the original. As the harbinger of the cryptocurrency era, Bitcoin is still the coin people generally reference when they talk about digital currency. Its mysterious creator, allegedly Satoshi Nakamoto, debuted the currency in 2009, and it's been on a roller coaster ride since then. However, it wasn't until 2017 that the cryptocurrency broke into popular consciousness. In 2024, the SEC approved the trading of ETFs that invest directly in Bitcoin, giving investors a simple way to bet on Bitcoin. Success of Bitcoin ETFs is a catch-22. The very success that the multiple spot Bitcoin ETFs have experienced has reignited a storm of criticism and pushback from U.S. policymakers. Renewed efforts to crack down on the energy consumption of Bitcoin miners, reviving the possibility of a targeted 30% tax on said miners, and concerns about price volatility continue to add to the public debate, undermining the need for more crypto ETFs. Even as crypto investors and advocates cheer higher prices, increasing flows and trading volumes, and more users onboarding into the space, these very same positive trends are being used against further such developments. The crypto industry has had a lot to celebrate in 2024, but these same successes might actually forestall more positive news. BlackRock and Fidelity ETF bombshell triggers a massive $75 trillion Bitcoin price prediction. The Bitcoin price has added around 350% since crashing to a recent low of $15,000 per Bitcoin, largely thanks to a fleet of spot Bitcoin exchange-traded funds ETFs taking Wall Street by storm. Though the huge Bitcoin price rally has sparked fears the Biden administration could be plotting to kill Bitcoin and crypto. Now, after Coinbase revealed its backing BlackRock's $5 trillion by 2030 game-changer, famed stock picker and Bitcoin bull Cathie Wood has hiked her Bitcoin price prediction, betting a coming Bitcoin price surge will give Bitcoin a market capitalization of $75 trillion by the end of the decade. Last year we put out our bull case for Bitcoin. It was $1.5 million. Wood, the chief executive of disruptive technology investor ARK, said on stage at the New York Bitcoin Investor Day conference. It was reported by Business Insider. With this institutional green light that the SEC has provided, kicking and screaming though it did, the analysis we've done is that if institutional investors were to allocate a little more than 5% of their portfolios to Bitcoin, as we think they will over time, that alone would add $2.3 million to the projection I just gave you, Wood said, referring to the U.S. Securities and Exchange Commission (SEC) waving through almost a dozen spot Bitcoin ETFs in January. Wall Street giants BlackRock and Fidelity have emerged as the two largest of the new Bitcoin ETF issuers, raking in assets under management of around $15 billion and $9 billion respectively. Wood's own ARK21 shares Bitcoin ETF now holds almost 40,000 Bitcoin worth $2 billion on behalf of investors. Wood's new Bitcoin price prediction could see Bitcoin hitting $3.8 million by 2030, a massive near 6,000% increase from the current Bitcoin price of $65,000 and market cap of $1.2 trillion. We think Bitcoin has miles to go, Wood said. We're at the very beginning of really putting in place the financial ecosystem native to the internet and disintermediating all of the toll takers. After a period of huge growth following their launch, the new spot Bitcoin ETFs, including Grayscale's converted trust, saw outflows over 4 straight days this week, according to BitMEX data, as the Bitcoin price swung wildly due to traders trying to stay ahead of Federal Reserve interest rate cut expectations. Meanwhile, traders are turning their attention to Bitcoin's looming supply cut, known as a halving, that's set for April. Rather than solely attributing Bitcoin's current fluctuations to the impending halving, we suggest a nuanced view, considering factors like spot Bitcoin ETF flows, evolving miner profitability post-halving, and general market psychology with high greed levels on pretty much all fronts. Mikkel Morch, founder of the digital asset investment fund ARK36, said in emailed comments, "With more Bitcoin retracements potentially looming and historical patterns indicating potential turbulence, we advise investors to tread carefully while exploring opportunities amid the uncharted territory of the 2024 halving." Don't forget to like, leave us a comment, share, and subscribe to this channel for more content like this. Thanks.